welcome to Crypto Disrupted. I'm your host, Trent Lipinski. I'm here with Sam from Coral. And tell us, Sam, what are you working on?
Hey, Trent. Thanks for having me. So Coral is a platform for startups and small businesses to raise capital through what we call revenue sharing, or what people might know as royalties. So it's a non-dilutive approach for fundraising and injecting capital in your business. Aligns the investors and entrepreneurs' interests together instead of having to give up board seats and equity and losing control. Our platform is backed by big data and machine learning, so it allows us to kind of tap into 10,000 data elements on each business to automate the approval process, whether to fund them or not. Where the blockchain part comes in our platform or our company in general, is that the way we fund those businesses is through our security token offering. So Coral is launching the world's first regulatory compliant securities token, and we're effectively going public to be the first public company that trades through a token. And what the Coral token does is, as a token holder, you own shares in the company, and you by buying the Coral token, you're indirectly investing in startups and small businesses. So basically, we take all that money that was raised during the offering and we deploy it in businesses. 90% of the capital we raise will be deployed in businesses as a revenue sharing agreement. And then we pay dividends on quarterly basis to all token holders in Ether based on our profits every 3 months.
Very cool. Yeah, I love the token economic model that you've got going here, because ultimately it sounds like you've got, by investing in your token, you're actually investing in all the portfolio of all the different startups and projects that you're working on.
Exactly.
And then you also have kind of a revenue sharing model where you actually pay the investors back. Can you kind of go into that?
Yeah, I mean, if you look at the ways people get sucked into the startup investment scene right now, we have the equity crowdfunding, right? So a bunch of people put $200 here and there, and then you'll have to wait 5-6 years for a company to exit. And by that time, you have a new technology already on the market. If there's new technology coming on the market every 2 years. So do you really want to hold on and freeze your money until then? So that's why we think the revenue sharing model is more interesting, because now you're deploying that capital in Coral, which puts it in, moves it in the startup a small business space, funds those businesses on your behalf, because our team has the expertise to kind of look at what's good and what's bad. We have the automation that looks at data and analysis, where usually you would never do on your own in an equity deal or a crowdfunding deal, or what we call peer-to-peer. So that allows basically investors to kind of indirectly invest in the startup space and small business space. They have the short-term and the long-term return. So they have the short-term return of dividends on quarterly basis from the money we're recovering in royalty payments. And then you have the long-term appreciation of the token values. As Coral grows as a company, and as our portfolio grows, as our investments succeed more and more, the token value is going to grow. So just like an Apple stock, right? So you're buying an Apple stock, and then the Apple shares are going to grow with every release they make, with every new device they enter in the market. So that's the long-term profits that you can make. And then at the same time, it's opening the door for new crypto investors when it come into the market. The market is so volatile these days that not everyone has a stomach for that, right? Especially people who are used to more like low risk investments. So our Coral token is kind of pegged or backed by an asset or a security, which is an equity, which depends on our investments and our performance as a company. So you're not gonna go to sleep one day where the Coral token is $5, and I wake up the next day it's $0, and then you wake up the next day it's like $200 or 1,000. So it fluctuates based on our assets under management and performance as a company.
Yeah, which I think is a good model, because you've essentially set this up to function very much like a stock, but at the same time, you're taking advantage of cryptocurrency and token economics to be able to do this in a way that you're still regulated. You're still going to be a publicly traded company. You're going through all the regulatory frameworks, but you've now got the creativity and the freedom to kind of create your own economic model around that. Exactly. That you wouldn't typically normally be able to do in a traditional stock market. So now you can try a new model that maybe this model is what typical retail investors and as you said, crypto investors, maybe this is a model they're going to be interested in, because now they're investing in essentially a portfolio of all the different projects that are under the umbrella of what you're working on.
Exactly.
So, and then they've got a clear path to a return. There's no, oh yeah, you might get a return later. There's no promises of Lambos. It's a clear, articulate, like, here's the model, here's how this works, here's how we're paying our dividends. Here's how, you can get an increase in your asset if you hold the token over time as the value of all the projects and all the companies under this umbrella grow. And as the entire organization grows in value, the token grows in value.
Exactly.
So you can invest basically on both fronts, knowing that the value of the token is attached to the value of the company, and the value of the company is attached to the value of the projects that are within the umbrella.
You got it right. You got it right, Trent. Yeah, I mean, the idea is basically, you're avoiding that volatility. It's new to the market, and chances are, if you're really getting into cherry picking which deals you want to make as an individual investors, you kind of exposing yourself to higher risk. What we do at Coral is we believe in transparency, and being a public company would require us to kind of disclose our financials every quarter. So when we say we're paying $1 million of dividends, we're not just coming up with this number out of the air, right? So there's backing, there's financials that shows that, and people can go and see it on the proper portals for public companies like SEDAR or EDGAR in the US. And then we'll also have our investor portal that allows all token holders to see what's the return on their businesses, on the investments we've made, what kind of business investments we've made, what's the return and dividends from each one of them, how are they performing anonymously. Obviously, we don't expose business names without their consent. But you can go say, for example, and see that we've invested in a SaaS medical company in Arizona, right? And it was $100,000 investment. This is how they're paying. They're paying well or not. They've late on their payments. What's their risk criteria for the Coral platform? So all of that is basically part of the process.
And I love you've got a chart on your website that I love, where you kind of compare banks, venture capitalists, and angels to your platform, and you kind of break down like several different things, from terms to personal guarantees, collateral, fundraising periods, repayment schedules, equity, and of course the expected return. So can you explain, like, when you were creating your model, what kind of led you to kind of take this middle ground, or to create this kind of new economic model, and how does that compare to a venture capitalist or a bank?
Yeah, I mean, I think there's different paths you can take as an entrepreneur when it comes to fundraising, right? You're either loaded and come from a wealthy family and you just fund your venture and move on your own. And if that's the case, kudos to you, good luck. You don't need anyone. But if you're a startup, your options are angels, friends and family, and VCs, right? And then we're starting to see a lot of companies that are either they succeed early on their own and they're too late for an angel investment, or too early for a VC. I mean, the VCs in general fund 90% or 99% of the companies that go to them, not because the products are bad, but they don't have the home run, right? So if it's a on-demand flower shop, right, it's not attractive for a VC, right? Although they're consistent in revenue and they're growing slowly and it's a lucrative business, but it's not going to do a 20x, 30x return for them, right? And that they get turned down. And on the other hand, you have businesses that they want to keep raising venture capital, but they're not ready, for example, for a global valuation on their company. So that's where Coral is that's what Coral is tailored for. We can help companies that are growing in the early revenue stage. They've had the product market fit. They have consistent sources of revenue on a monthly basis, and they are ready to scale. But they don't need to give up equity. Sometimes scaling your business might require you to inject $100,000 to bootstrap the growth. I mean, Atlassian only started like giving up equity at a later stage, and I think by the time they went IPO, the founders retained 70% of the company because they did not raise much. They had enough capital coming in to bootstrap the revenue process and revenue cycle to keep the product development going on. So there's different type of businesses. Some businesses require a VC, some businesses do not. Uber, Airbnb, and those kind of businesses, they're cash heavy. They require to raise money all the time. And a VC is a good model for them. But a business that only needs $500,000 a first time injection, and then they're going to bootstrap and keep going and pushing, they don't have to give up 30% of their company for that. They'd rather pay 1.5x and pay the 500,000 or 750,000, knowing that 5 years from now, if they sell their company, it's still theirs and the returns are all theirs, right, between the founders. And that's what Coral's tailored for. There's a 3.6 trillion gap for funding for small businesses and micro businesses worldwide. And then alone in North America, you have 800 billion, right? So, and that's what Coral's playing with. That's the market we're playing in.
And you're kind of filling that middle ground. And then there's still return for the investors because, you've got listed anywhere between 15 and 30% returns. And then if they're buying the token, as your entire asset portfolio grows and as the value of Coral grows, they also might start to see a return on the token eventually as well. So there's a couple different ways they can potentially, get a return on this.
Yeah, exactly. Yeah, exactly. As I told you, we have the short-term and the long-term return. We also take warrants on all of our deals, meaning we have the right to participate in any future equity raises in case they go public, but that's what we call the upside participation. So that even means higher returns for our token holders. But at the same time, look at just the equity crowdfunding space. It was a big hype and still is for a lot of companies where they all want to get into the venture capital space. But now you're holding your money for 6 years. Companies are taking 5 years longer to exit these days. Exits are happening less now, probably more acquisitions. Do you really want to wait 6 years to get that 20x return that you might not even get? So that's why with Coral, you get that consistent quarterly return, and then hopefully as you retain your shares, your share value will go up in price.
And how can startups get involved with your fund and what you're working on?
Yeah, so we have a beta right now that's actually live. As of today, a business can go to our website, coral.io, so corl.io, and click on apply for funding, and then they can fill a quick application. It takes less than 10 minutes. Right now, we're focused on North America, US, Canada, and then we're expanding to Europe in 2019. But by all means, if you're outside those jurisdictions of US and Canada, you can still file an application and connect your data and provide us with all the information. And once you're ready to expand to your jurisdiction, we'll definitely look into it or refer to a potential partner in your area.
And what kind of startups are you looking at?
We look at companies that have a consistent source of revenue from consistent, on regular basis, basically. So like a SaaS or like software as a service, e-commerce, fintech or blockchain AI. If you're in the revenue stage as well, that's a good candidate. So we're looking more at online presence and technology based.
Okay. And so how, I've talked to a lot of different CEOs on the show and a lot of different blockchain startups, and they all have, different economic models, and they're all kind of trying to figure out this space. And it seems like you've potentially figured out a model where you're able to use your token essentially as, to represent the equity in your company. And you're doing all the regulatory, you're doing all the regulatory frameworks, you're doing everything as legally as possible. So this model that you're using, I've been kind of thinking about this model a bit myself, and thinking that, this is probably going to be the path forward for a lot of these, blockchain startups and anybody who's looking to explore using token economics to be able to raise funds. Can you kind of what conversations, what events, what did you see in the market that led you to taking this path that you're on right now?
I mean, we saw in 2017, the majority of ICOs were, if 99.9% were utility tokens, or what people call, because we have that utility versus security token. A lot of them had no expectations of profit. You didn't know what the value is. You had a lot of gaming protocol, a lot of decentralized file storage. I mean, how many of those do you need, right? So the ICOs became a way of companies, whether they're good or bad, to raise quick buck. And a lot of them, 80% of ICOs in 2017 has failed to deliver a product. The regulators started cracking down with almost over 100 subpoenas early 2018 by the SEC. I mean, that kind of put us in the space where we believe that tokenization of assets is the next thing in the financial industry. And if we want to get financial institutions and more organized investors to come into the crypto world, regulations will have to come. And that's when we started looking at security tokens. And we partnered with Polymath, which is our partner in Canada, based in Toronto. They're building a platform that allows security tokens or companies to launch a security token, whether it represents a fund or it represents equity, a royalty, debt, anything that we consider a security in the financial asset. And that was part of our philosophy. And that's why we decided, instead of doing traditional things, we kind of wanted to think outside the box. And that's how the Coral token was launched, as a securities token structure.
Awesome. Yeah, no, I love this model. And I think this is, I've been telling people that this is going to be the model in 2019. So it's nice to see that, we're already trending there and we're only halfway through.
Oh yeah, it is definitely. I mean, you're starting to pick up in 2018, and in 2019, it's going to become the norm to hear more STO instead of ICO.
Yeah, absolutely. And I think it's a good thing. I think it'll bring credibility to the blockchain space. I think this will bring some credibility to crypto, knowing that those regulatory frameworks are still in place, but we get all the advantages of crypto. We get all the advantages of being able to create new systems to be able to fill different places in the market. Because right now, the traditional ways of fundraising or getting a loan, you've only got a couple options. You've got banks, you've got VCs, and you've got angels. So now you can create, Coral, and you can create something that's kind of in the middle, which is probably an underserved market, that because of the way that the regulatory frameworks have existed before and the way that banks have functioned before, they just didn't have the flexibility to be able to enter this space, but the tech now enables that. So, now finally companies can take advantage of that and create solutions like what you're working on, where in your case, your token economic model is in essence your product. I mean, obviously, you're doing, you're obviously working with all the companies that are going to be in your portfolio and funding them. And there's definitely, I'm sure there's plenty of work to be done there and due diligence and everything else. But at the same time, you've kind of removed some of the barriers to entry.
Yeah, I mean, yeah, definitely the token is part of our product. I mean, we're not able to do the investments without the token. It's more like an overlap of the crypto world with the fiat world, or we're trying to find a real life problem and solving it with crypto. And that's what the security token that we're launching kind of does. So yeah, it is a core part of our product, along with the machine learning and the AI we're building that kind of allows to automate the process. And then, yeah, it was a long way to get there, but we started through definitely for token economics, and I think that's what got us there. I lost you for a second. I think I missed the second part of your question. So.
Oh, no worries. Like I said, this is just I love what you're doing with your token economic model. I love that, your economic model is essentially part of your product and what you're doing. Like I said, I'm sure the process of doing the AI and all the other stuff is complicated, and but you're working on a solution to do that due diligence to make sure that these are sound investments and that you're investing in the right projects, and you're creating a new model to be able to do this. So, I mean, this essentially kind of challenges traditional banking. This challenges traditional angel investments. This challenges traditional venture capital, and it creates a new model that enables startups to be able to potentially get the funding that they need without having to give up the equity. And then the investors that invest in those projects and in Coral ultimately are getting returns. So
yeah, I mean,
everybody wins.
It's exactly, it's a win-win for everyone, right? I mean, now you're getting exposed to that space of startup and small business investment without taking a huge risk. Now it's super volatile in crypto, and businesses don't have to chase 6 to 9 months process to find money, because now they can do it and get funded in up to 2 weeks or within 2 weeks, and then focus on actually doing what's important, building their business and growing it.
Yeah, I definitely could have used something like this when I was running my last startup, because I had to. In the end, I ended up selling the company instead of taking investor money, because I did the math. If I,
It's
at the point I
better to
was at in
sell
the
them.
business, it was better to sell than to take investor money because I was going to have to give up so much equity that it wasn't really going to be my company anymore.
Yeah.
So it made more sense at the time to just sell the company and take the exit. So now with solutions like this, companies that are in that dilemma that I was in, now they potentially have a source
Have an
of funding
optionality. Yeah, they have an
and they have another
optionality.
option.
Yeah.
Yeah. And it's totally legal. That's the other, that's
Yeah, it's
the
I
great thing
think
about what you're doing.
if you exactly if you watch Shark Tank and or like Dragon's Den, I mean, the royalty investments got popular because of that. We see like Mr. Wonderful doing those deals, what we call the venture debt deal. We just kind of took that and made it online, technology based, and allows the process to be better and definitely cheaper than what other investors in the royalty space kind of like to price. But yeah,
And
it
you
is
automated
definitely.
it. And you automated it as well.
Yeah, exactly.
That's
Yeah,
the other, yeah.
yeah, exactly.
So awesome. Do you have any final thoughts before we wrap up?
Yeah, if you want to know more about Coral, you can go to our website, as I said, coral.io, so corl.io. You can join our Telegram group to get to know more about our token and how it works and what we're trying to do. Feel free to drop us a message. We also have a YouTube channel where we post always videos about the industry and businesses that we're looking at, some educational content. So please take a look and drop us a line, follow us on social media. There's a link at the bottom of the site. So yeah, and feel free to reach out to any of our team members. We're always online, always ready to answer any question.
Cool. Well, thank you for coming on the show. This is, again, I'm impressed with your token economic model. I think this is a model that other companies should be looking at to potentially follow for their own projects. And anybody who's considering getting some initial investment or continuing to grow their business, I think this is a good potential alternative to venture capital and banking.
Thank you. Thanks for having me, Trent. And again, I think the space is going to evolve, and there's still more to be done. We're at the beginning of the security token space, and I'm looking forward to discussing it with you, hopefully again in the future, and to see where like an update of where we were and where we are.
Yeah, that'd be great. And thank you for leading the charge on figuring out what a regulatory security looks like backed by a token. You're paving new territory right now.
Yeah, we'll take some daggers in the back for the community.
Awesome.
All right.
Well,
Thanks for having me.
Thank you again for coming on.